back to Fast Money here on Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon. Do we have Landon?
Yes. Hey, Tom. Good to be here. Thank you.
There we go. So we're talking Nike today. Stock's underperformed. It's had a nice snapback rally here over the last couple of months with the overall market, Landon. But I got to be honest with you, it's underperformed probably for a reason, because it hasn't been a few good quarters of results. And I got to be, just from a personal aspect, I haven't bought anything Nike in probably 3 years or anything, because there's other brands, there's competition coming into the space. Do you guys have data that kind of reflects the underperformance of this stock, or is it ready to take off?
Sure. Well, first, let me throw you an anecdote on the other side. My boys are all Nike all the time, so I'm making up for your lost sales, and they change shoe sizes every 6 months to a year. So yeah, we're doing our part for Nike. But I tell you what, when you look at the data, I mean, one of the first things we look at is happiness, and they're very strong. They're up about 5 points on a year-over-year basis, near the top of the competition, over Under Armour, over Adidas. Behind Lulu and Skechers, as you can see here, but doing really well as far as footwear goes. They're at the top of the second group there on happiness. And 72% is a strong number, so no problems there. And then when we look at just total mentions or actually web data, it could be more useful. When we look at web data, it's up on a year-over-year basis about 4 points. You can see the spike around the Christmas holiday season here. Had it last year, having it this year, but this one's a little bit stronger. So, we're seeing that the plus 4% is actually in line with a lot of analysts expecting the annual revenue to be at about a plus 4% as well. So I think that, we agree with that. And yes, the stock has been on an incredible run since the end of September. I think it was just under 89, and now we're pushing 122. It's close to a 50% run. Really strong numbers out of this over the last little bit, but we're at where we were last year, right? I mean, you go back to December of 22, this is basically where the price was. It was bouncing around in this area. So it's been a rough year for investors. Hopefully they were able to hold and weather that, and they didn't bottom tick that 88 and sell there, and they were able to take advantage of this last little run. But they have done some good things. I mean, their last earnings report, they talked about inventory reduction of about 10% on a year-over-year basis, which shows their ability to, have an effective supply chain and inventory management. Obviously, we all know about their direct-to-consumer focus, trying to go around the middleman, which is going to increase margins, obviously. It also allows them to have more control over their brand presentation and their customer experience. Not that Foot Locker did a poor job at that, but Nike wants to elevate that, I think. And so through their stores and through their web experience, I think they're able to push the Nike is a premium brand message, and they've been doing well. So, the stock has been on an incredible run lately, but again, over the last year, it's flat. So I think it's deserved based on the turnaround that they've got. I am worried to hear on the call what kind of theft that they've been experiencing, shrinkage, if you will. But other than that, I think that the company's doing well, not great. Relatively speaking, I think there's a lot of others that have done better compared to the market. So a little bit behind there, but I kind of agree with where the stock's at right now.
With that direct-to-consumer piece, and it's interesting. I was reading a story. They're pushing like almost 200 new stores. I think that's fascinating, and probably they're taking that page maybe from the Lulu playbook, right, where Lulu only sells in their stores. But anything in your data that you see where people are happier or more interested in going to a Nike store versus, say, a Dick's or some other large kind of aggregator to buy their products? Do they have a reason to push forward with those stores? Because that's a huge cost, and I'm wondering personally if that's going to come through in what they're telling us today in their call, because it's a big cost to the bottom line to build out stores like that.
Sure, and I think you can see it as an investment. I mean, they have to be a little jealous of Lulu's ability to just completely bypass the middleman, take all of that percentage for themselves. Now, it is a lot of money and a lot of headache to go that route. It's much easier to just ship millions of shoes to Foot Locker and say, here, go sell them. But yeah, I think it's a long-term play, and they're looking to, obviously capture a larger percentage and just make the company more profitable long-term. Happiness-wise, I believe that they are beating Dick's when it comes to happiness. We don't have exact data on whether people are when they talk about buying shoes at Nike stores versus buying Nike shoes at Dick's stores. But just I think generally speaking, that people are very happy with the brand, and they do have a lot of brand moxie, cachet. I mean, it goes a long way. That's a very, very powerful brand. It's one of the most powerful in the country. So I think that they're going to take advantage of that. I would guess that their brand recognition is stronger than any store that's selling their product. And so why not take control of that experience?
Yeah, and Landon, last Foot Locker earnings, this stock, Foot Locker popped by nearly 12%. So given a little bit of boost, Nike was up on that news too. But going into this report, are you guys still positive on it? Because like you said, we're back to year ago levels, but at the same time, it's rallied a lot and it's overbought on a technical level. So what's your score here on the earnings?
Yeah, the data is pretty strong on it. It has been, I guess, softened by this stock run. I really wish we were trading at 110 right now. I'd be able to throw down a pretty bullish call on it. As it is at 122 or 123, we're at a plus 31. So we're still bullish enough to make a bet, but it's definitely been softened by the incredible run. And I agree. Technically speaking, it may be a little bit overbought, but everything that we have shows a company that's doing well, that's executing, that is loved by the customers, and is improving on a year-over-year basis. So how that compares to expectations with this run-up, I don't know. But based on the data alone, we are at a plus 31.
Plus 31. All right, great stuff. Great data as usual, Landon. Have a great day.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down Nike. So, Nick, I looked at this one, the rally that it's had, RSI levels near 80 on the relative strength indicator, so overbought on a technical basis.